Good morning and welcome to Market Cafe with me Ankur Mishra and Kanishka Sarkar. In next 1 hour, we'll give you all the details that matters to you before opening bell. But let's get started with US market first. Good morning Kanishka, how was the mood in US yesterday?
Very good morning, Ankur. The S&P 500 actually climbed for the fourth straight session, adding to this week's rally. After the US and China agreed to temporarily slash tariffs, as we've discussed earlier, Treasury yields also fell, providing some tailwind to stocks. Now, the broad market index rose about 0.5%, while the Dow Jones Industrial Average, which had been trading in the red territory, has now added to 70 points or 0.65% in Thursday's trade. The Nasdaq Composite, however, underperformed, slipping 0.18%. Now, for the week so far, the Nasdaq Composite is higher by 6.6%, trailed by S&P 500 ahead just 4.5%, and the Dow, which is up 2.6%. Now, remember, the confidence in the immediate outlook for stocks is strengthened in the wake of last weekend's talks between Treasury Secretary Scott Bessent and Chinese officials that appeared to stave off a short-term decline in economic activity and a ratcheting up in inflation. Now, tech giants are putting up a strong show this week to date. Now, Nvidia and Tesla are both up around 15% each. Meta Platforms has added nearly 9%, whereas Amazon and Alphabet, they are up about 6% and 7% respectively. Meanwhile, just on Thursday, traders were also assessing the state of the economy with an unexpected decline in wholesale prices last month. The producer price index for April declined 0.5% month over month. Retail sales increased 0.1% in April, which matched consensus estimates, while the industrial production numbers for April decreased slightly more than expected.
Right, if you talk about oil prices that fell on expectations that US and Iran may soon reach out a deal over Tehran's nuclear program. International benchmark Brent crude futures with July expiry fell 2.36% to close at $64.5 a barrel, pairing some of the earlier losses. US West Texas Intermediate, that means WTI futures, meanwhile closed at $61, down at 2.5% for the session. Speaking in Doha, Qatar, during his Middle East trip, US President Donald Trump said US was getting close to securing a nuclear deal with Iran. His comments came shortly after a top advisor to Iran's supreme leader said that OPEC producer was ready to sign a nuclear deal with certain conditions in exchange of lifting of economic sanctions. The prospect of a US-Iran nuclear deal is expected to have a profound implications for the oil market, and that is something we'll watch out.
Absolutely, we'll keep watching out for crude prices, but then there's also lots more to watch out for. Like in the US, we have consumer sentiment index that we'll be tracking today. Japan GDP and industrial production data is also something that we'll be watching out for. Now, apart from that, Advanced Enzyme Technologies and SPI, those are the shares that are expected to trade ex-dividend today. Now, apart from that, in terms of other events, we have Piyush Goyal, who's visiting US for trade talks. That's a very important event we are going to be watching out over the weekend. Now, apart from that, ECB Chief Economist Philip Lane is expected to speak later in the day. So his comments are also something that we are going to be watching out.
Right, the US Federal Reserve ringing warning bells as the official kickstart their two-day framework review meet. Chairman Jerome Powell flags the need to relook at both jobs and inflation picture on the back of potential supply shocks becoming a more frequent occurrence in the years to come. While the central bank top boss refrained from providing any details on the current policy and macro stance, Powell said he expected April PCE price inflation to have fallen to 2.2%, a tepid reading, but still likely not reflecting coming tariff-driven price increases. The recent comments are suggestive of the fact that Fed may be moving towards a strategic approach that makes more explicit its plan to stay in front of potential inflation shocks in the future.
All right, then those are the comments coming in from the Fed chair. But moving on, let's look at an earnings candidate. Now, Chinese e-commerce giant Alibaba has delivered a miss for its fiscal fourth quarter earnings on both top and bottom lines. While falling short of analyst expectations, revenue was nevertheless up 7% year-on-year. The company's net income was also still 279% higher year-on-year off a low base. Now, reacting to these results, shares of the company fell over 7%.
Now shifting focus to Japan, where the economy has contracted 0.2% on a sequential basis, marking the first quarterly contraction in a year. On an annualized basis, Japan's GDP contracted 0.7% in the first quarter. However, on a YOY basis, GDP has expanded 1.7%, the largest expansion since the first quarter of 2023, and a stronger showing compared to 1.3% growth seen in the fourth quarter. Remember, the GDP print came in at a time when country is locked in a trade negotiation with the United States, and initial talks between both the sides so far has not been yielding any conclusive deal.
Those are the Japan GDP numbers. But moving on, we have some big commentary coming in from BlackRock top boss. Now, Larry Fink acknowledges the disruptive nature of US President Trump's tariffs, but says that the story for the US economy is not over. Even as he spoke of current recovery in the markets, he says that there's ample anxiety and uncertainty in the investor community. Now, citing fears of a slowdown, Fink does show faith in the US financial system and says it is safe and sound.
Right, moving on, even as Donald Trump is once again harping on his Make in America rhetoric, saying he does not want Apple to set up manufacturing in India, government sources tell ET Now that iPhone maker is not going to derail any of its plan. Let's go across to Sumita Karir, who has been tracking this story very closely.
Sources suggest that iPhone maker Apple's investment plans for the India market are currently intact, and the company proposes to have a major manufacturing base for its products in India. Remember, Donald Trump stated that he asked Apple CEO Tim Cook not to make its products in India, but soon after that statement, Apple's India officials spoke with government officials and suggested that and assured that the company's investment plans are intact. Remember, India has become a critical hub for Apple's global supply chain in recent years, with its supply chain partners expanding operations under government's PLI scheme. The company reportedly reached $22 billion in production value in the country for FY 2025. And just in April, Union IT Minister Ashwini Vaishnav had also announced that iPhones worth 1.5 lakh crores were exported from India in fiscal year 2025. Reportedly, Apple's confidence in India reflects in the fact that Apple is looking at shifting its production of iPhones for the US market to India, and that actually shows the kind of commitment that Apple has made to the India market, both in terms of manufacturing and retail. In fact, government sources suggest that 15 to 20% of iPhone's global output comes from India and from its suppliers here in India. Now, AirPods are also being manufactured in India for exports purposes. And remember, a couple of months back, ET Now had exclusively told its viewers that the company is looking at producing 25% of its output from India next year.
Thank you, Sumita, for getting us that update. In fact, as we track Trump's moves, now the United States is also set to impose a 5% tax on remittances sent by immigrants, a move that could impact non-resident Indians, or NRIs as we call them, who sent money back home. Now, this development depicts a significant shift in US tax policy, especially for foreign workers who regularly send money to their families abroad. Now, this proposed tax aims to generate additional revenue, but critics argue it will burden hardworking diaspora communities. So what does this mean for NRIs and their families in India? Sumit is joining us with all those details.
Oh, well, there are towns in India, especially in Punjab and Gujarat, that are dependent on this remittance money. For them, it's going to be a big loss. But on the other hand, the people who send the money, they're also, in a way, going to give this money as a tax, 5% tax, for the services in US only, the border services, border state services, but they are going to be penalized. But it's going to be there for non-citizen, and it's a proposal currently, and it was tabled on May 12. So India, if you look at the remittances that come from US, are worth $83 billion annually. So on that, the 5% tax will be a huge amount. For every 1 lakh rupees spent, send back home 5,000 rupees to be given to US government. So that had not happened earlier. So clearly it's not a good news for all those that are sending money abroad. But we are learning from the sources. It is not going to be for the people, for the legal citizens of the US, but maybe the non-citizen or certain category. Well, that certain category has to be drawn out, and we are waiting for that clearance.
Thanks, Sumit. Staying on this development, we caught up with whole host of experts to decode this development. Let's listen in what they had to say.
You must also understand that this is not really about policy, it's more about politics. And so he wants to convey the message that he's taking care of America first. Ditto with that Apple thing also. Apple's CEO is not going to do what Trump wants him to do. Apple's CEO is going to do what is good for Apple's shareholders. And so a lot of this is talk. It's not going to happen. But that is the Trumpian world. You know, there is a lot of talk, and that's the way it is.
Actually, there are a lot of immigrants that do not have papers who are paying tax already. And so this is, in essence, a double tax. And the consequences for places, not only India, but Mexico, Guatemala, people who are sending money home are devastating. And so the result is that you would have more pressure for people to come illegally to the United States. And I would point out that there are many ways to get around this kind of proposal. Instead of promoting transparency, what it does is drive people to other means of paying, such as cryptocurrency, which is a way in which the president and his family are enriching themselves through their own cryptocurrency approaches. So this is one of those policy proposals of the Trump administration, which follows just throw everything against the wall and see what sticks, but has a broad appeal, unfortunately, to the MAGA base, which is basically not in favor of the kind of interaction you need to build peace and prosperity.
Any kind of tax you can say is stealing money. So this is obviously an additional tax. I think the bigger issue, I mean, we suppose that instead of a remittance tax, they impose an additional tax on non-citizens, on the incomes that are earned in the US. Maybe that, I'm not saying that's a good thing, but that at least has the advantage of not removing the grease of the economy, because free flow of remittances is a thing that is so many countries depend on it, obviously after they pay tax in their host country. So if the host country thinks that they want to charge more, then maybe on the incomes that are earned they should charge more. Maybe I'm not recommending it, I'm saying that is the better way, instead of making the transactions more difficult.
All right, those were the expert views on Trump's tax policies. But moving on, Indo-Pak tensions spill over tourism. Now, the centre has revoked the security clearance of Turkish firm Celebi Aviation, which is responsible for critical ground operation at major Indian airports. Now, meanwhile, the company is refuting allegations, citing the company's ownership. The firm says that the majority-owned international institutional investors from across Canada, the US, the United Kingdom, Singapore and UAE, as well as Western Europe. In fact, Samir joins us with all the details on this front.
In a big and bold move, sending a strong message to Turkey, the Civil Aviation Ministry has revoked the security clearance for Turkey's ground handling agency, Celebi Airport Services Private Limited, with immediate effect. The notification issued by BCAS, the Bureau of Civil Aviation, in its notification clearly mentions that this security clearance of Celebi Airport Services Private Limited, it has been revoked with immediate effect, and the decision has been taken in the interest of national security. security. Now, let me tell you that this Turkey's private ground handling agency, Celebi Airport Services Private Limited, it has been contracted for the ground handling services at 9 airports across the country, which includes important airports like Bengaluru, Delhi, Bombay, Hyderabad, Goa, Cochin and Kannur. So at these 9 airports, Celebi had a strong presence providing the ground handling services. But this has now been revoked immediately with the immediate effect. And the decision largely it has been taken keeping the national interest in mind. Now, why this growing tension between India and Turkey? This is because that when India and Pakistan, there was a growing escalation between India and Pakistan, and when the Operation Sindoor was carried out, then the UAVs or the drones which were fired upon India, there were links that these drones are connected with the Turkey. Turkey has provided support to Pakistan, after which there was a strong sentiment in the Indian citizens to boycott not just the trade connections with the Turkey, but now the government has taken the cognizance and they have revoked the services of Celebi Airport Private Limited, and it also means that similar sort of other harsh steps might be taken up by the government side in coming days.
Thanks, Amir. Now moving focus to India-US trade deal, External Affairs Minister S. Jaishankar said that their trade deal has to be mutually beneficial for both the countries and added that trade talks between India and US are underway. Let's listen into what he had to say.
On the trade remarks, let me say this, that look, between India and US, trade talks have been going on, negotiations have been going on. These are very complicated negotiations. They are very intricate. Nothing is decided till everything is. But any trade deal has to be mutually beneficial. Any trade deal has to work for both the countries. And I think that would be our expectation from the trade deal. And until that is done, I think any judgment on it would be premature.
All right, then, shifting focus to Commerce Minister Piyush Goyal's visit to Washington, which is slated for tomorrow. Now, the visit is aimed at securing an interim bilateral trade agreement with the US. Let's go across to Sumit to get us all the details about the Commerce Minister's visit to the US. Sumit, good morning.
Good morning, Kanishka. And it's going to be, as we heard, MEA Jaishankar saying that now, all that. And going forward, we have to look at this as a very important visit because Piyush Goyal, last time when he visited UK, he finalized the deal and came back and announced FTA with UK. But this time it looks like it's an important visit from his side. We know that US and India, they are all going to finalize the contours of BTA by the fall of this year. So in that scenario, this visit assumes significance. There he is expected to meet US trade representative, US commerce secretary, and other officials as well. India, US, as we know, the 90-day pause is there as far as tariffs are concerned. They're discussing tariffs on a number of issues, including the zero tariff or maybe less tariffs on automobiles from US, from alcohol, and from India side, leather goods and electronic goods. So yes, it's going to be an important meeting. It has assumed more significance because of yesterday's Donald Trump saying that he doesn't want Apple to make in India. They can take care of themselves. So in the light of that, this visit assumes more significance. We expect that Piyush Goyal is again going to be India's broker for peace and trade in US.
Thanks, Sumit, for that detail. And in this show, we take care of all your news requirements also from Bollywood. From blockbuster backdrops to blacklisted locations, Bollywood is rewriting the script while keeping diplomatic relations in mind. Turkey and Azerbaijan, once cinematic sweethearts, are now facing a cold shoulder from India's film fraternity. This comes after Turkey and Azerbaijan backed Pakistan amid Indo-Pak tensions post-Pahalgam terror attack. India first is the
box office mantra. But with that, it's time to take a very short breather on this edition of Market Cafes. Don't go anywhere. We'll be right back.
Welcome, you are watching Market Cafe, and let's do Asian markets check how they are faring. After yesterday's data of GDP, Nikkei, you can see 0.5% down with 202 point cut. Similarly, talking about China, Shanghai is also down 0.5%. That's the rate on your screen. It has come down to just 0.2% with 9 points down. And Hang Seng is also trading low in the morning. More than 0.5% cut here, 170 points down on Hang Seng. The US China trade deal buoyancy has now come down. The only market which has now marginally come into the green is Kospi, just trading flat to positive note. And similarly, Australian market ASX 200 is more than 0.5% up. Kanishka, but you see the implied open, that is indicating a positive start, which is quite a surprise.
Well, absolutely. The implied open suggests that we could be starting above anywhere between 25,000 and anywhere above 25,170. But let's see how that pans out. But moving on, Hyundai Motor India Foundation, in collaboration with the Samarthanam Trust for Disabled and the Cricket Association for the Blind, is organizing a 5-day international bilateral blind men's cricket series. It's called Samarth Championship for Blind Cricket 2025. Now, this series is right now happening in Bengaluru between India and South Africa's men's blind cricket teams. Now, this championship will set the stage for the year-long campaign Samarth by Hyundai that is coming soon on Times Network. Now, let's go across to get all the action on ground, where Times Network's Karishma Singh is standing by to bring us the update from day 5.
We are here at the Sai Krishnan Cricket Stadium in Bengaluru, where the Summer Championship for Blind Cricket 2025 is taking place. Today, of course, is day 5. India has won this championship. Now, let's talk about the organizers of this championship. It has been done by the Hyundai Motor India Foundation in collaboration with the Cricket Association for Blind in India and also the Samarthanam Trust for the Disabled. It is a larger corporate initiative under the aegis of Samarth by Hyundai. Now, why does this championship become so important? Because this is a platform not just to celebrate blind cricket, but these cricketers as well, who of course have had challenges in life, have had hardships in life, but they have overcome that to tell the world that they are here to stay and they have a brighter future to look forward to. They are providing inspiration for millions and millions of people who are watching them. So stay tuned for all the live action on day 5.
Moving on now, food delivery giants Swiggy and Zomato have slashed benefit for their premium users. From now on, all subscribers will face a rain fee, and this is effective today itself. Are these perks drying up just when customers need them most? Anjali Palod joins us with more details.
Well, paying member or not, users of Swiggy and Zomato will now be bearing the rain surcharge on food delivery orders, as both of these companies have decided to cut the member benefits ahead of the upcoming monsoons. Now, Swiggy One and Zomato Gold members enjoyed a waiver on the rain surcharge as a part of their membership benefits. However, both the companies have decided to roll back these benefits. Now, the platforms say that this fee helps support their delivery partners, and during rains, this rain surcharge can range anywhere between 15 to 35 rupees, which will now have to be borne by users who also are enrolled on these memberships. Now, this is a larger push that both of these companies, Swiggy and Zomato, have been having towards turning profitable and increasing the profitability as their quick commerce arms continue to bleed, and food delivery is what is keeping hopes high for both of these companies. Just a quick rewind on their Q4 numbers. The Q4 adjusted EBITDA of Eternal, which is Zomato's parent company's food delivery business, was at 428 crores, which was up 55% year on year. And as for Swiggy's food delivery, the Q4 adjusted EBITDA stood at 212 crores, which grew 5 times year on year. So that is what Swiggy and Zomato are doing to ensure that the food delivery business continues to bring in profits.
Okay, thank you, Anjali, for getting us all those updates. Now, moving on, let's take a look at some domestic macroeconomic data. Now, amid the global tariff wars, India's trade deficit in April expanded to $26.42 billion in April versus $21.54 billion in the previous month. Now, this sharp expansion in trade deficit was led by 19% jump in imports to nearly $65 billion. Meanwhile, exports rose around 9% to $38.5 billion during the same period.
The rate of employment in India measured first time in monthly terms has stood at 5.1% in April 2025, showed India's unemployment rate at 5.1%. Joblessness among men stayed slightly higher, 5.2% compared to that of women at 5%. In urban areas, unemployment rate was 17.2%, while 12.3% in rural areas. Until now, the labor force survey was released on a quarterly as well as annual basis. The data also showed that labor force participation rate among people aged 15 years and above was 55.6%.
All right, then we'll be tracking the labor data every month from now on. But with that, it's time to take a very short break on this edition of Market Cafe. We'll be right back, so don't go anywhere. Back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar, and Ankur Mishra. Well, it's now time to take a look at all the stocks that you should be keeping on your radar today as we pencil in a start in the green for the Nifty. In fact, Gaurav is standing by with just that list. Good morning, Gaurav.
Well, let's talk about Bajaj Autos, because this company is going to add an additional investment in one of their wholly owned subsidiaries, Bajaj Auto International Holding, and the additional investment is going to be in the tune of around 1200 crore rupees. Biocon is also in focus today because one of their wholly owned subsidiaries has now received US FDA approval for one of their drugs called Rivaroxaban tablet. Now this drug is used for the treatment of blood clots. Infosys is also in focus today because company said that they have actually signed a collaboration with DNB Bank, which is actually Norway's largest bank, and with this they will be helping bank to accelerate their digital transformation. Crompton Greaves is also in focus today because companies said that they are going to expand their manufacturing facilities with greenfield expansion, and in the phase 1 they are going to invest around 350 crore rupees in this greenfield expansion. Other than that, there are a few stocks which will be in focus on the back of the numbers. So first, let's talk about Godrej Industries, LIC Housing Finance, PB Fintech. All these companies actually reported good set of numbers if we compare it with the estimates. Other than that, when we talk about Pricol, LT Foods, Balrampur Chini, in fact, when we talk about CG Electricals, we saw inline or rather a mixed set of numbers from these companies. And on the other hand, we saw NCC and NOCIL actually coming up with weak set of numbers if we compare it with the peers as well as the brokerage estimates that they had. So definitely watching out on all these companies on the back of the news flow as well as the numbers that they have reported today.
Thank Gaurav for that detail. Now shifting focus to big boy Reliance Industries, which has seen an uptick of 18% so far this year. My colleague Sharad Dubey is here to put the moves into perspective.
Well, the big boy Reliance has joined the party. It might be late, but it is actually covering up. Of course, we saw rallies in the banking space and also in a lot of constituents of Nifty, and now the final rally is coming and is being fueled by Reliance as well. Fourth quarter was strong show with consumer-facing business of telecom and retail. And interestingly, if you look at Jio, there's expectation of further ARPU hikes in the year itself. The industry is expecting, and also in terms of value unlocking, also Jio's IPO is something which the street is watching out for. Two important things are also moving in tandem. The first one is that the succession plans is becoming more prominent. More senior appointments are coming in the boards, and also interestingly, the company is mulling stake sale in Asian Paints, which will aid the overall treasury income as well when it comes to Reliance. Now let's look at the calendar year returns, how Reliance and Nifty have actually played out. 2023, Reliance was just 11% against Nifty's 20-odd%. 2024, it underperformed the markets in a bad way, almost 6% down. Nifty was up 9%, but this year is the year of return. Last 2 years underperformance being grossly overshadowed when it comes to the performance against Nifty. Reliance is up 17%. But there are two important things to know about the guidance ahead, what lies ahead. Of course, AGM is also coming in a couple of months. Two important things: renewable energy, right from incubation to operationalization. Now that means more cash flows will be generated, additions to the P&L will start coming in. And interestingly, Jio with a telecom layer is now expected to add a new layer. This is the AI layer. So that'll be very futuristic, and of course that will also decide what the perception would be when it comes for Reliance. Now let's do an analyst take. What's the entire picture coming out to be? Almost 95% of the 38 analysts tracking the stock have a buy rating. The 12-month target price is at 1551. That means currently 9% return potential is left. But the lowest target price, 1293 coming from Ambit, while the highest, Mirai Assets, 1950 rupees.
Thank you, Sharad, for getting us that roundup of Reliance. But now, moving on, time for an exclusive. Now, sources say that the Power Minister is set to take it to the cabinet soon. Prakash is joining us with all the details.
Yes, we're learning from our sources that the government has given final shape to the new draft electricity amendment bill. That's an important development coming in. We're given to understand that the Power Ministry has incorporated necessary changes to the bill based on observations made by the Parliamentary Standing Committee. We're given to understand that the public comments on the draft bill will be invited soon. It is important to note that the bill was referred to the Parliamentary Standing Committee in 2022, and since then, stakeholder consultations have been taking place, which have been completed now, and the Power Ministry is moving ahead with the new draft bill. Sources are also indicating that the Ministry will approach the Cabinet after completing IMC process. And you are aware that the states had raised some concerns over several provisions of the bill that advocates entry of the private sector into power distribution sector. Discoms portability was also part of the proposal. Now, sources are indicating that the government is likely to revise certain provisions to gain state support, which is very crucial at this point of time. And this bill could play a significant role in the modernization of the power sector.
Let's shift focus to two stocks which should be on your radar today morning after market opens. These stocks are Bharti Airtel and JSW Infra. Why I'm saying so? Because there is block deal which is expected. Kanishka, you would have seen that we have accessed the term sheet which says that Bharti block deal is likely at 1800 per share, and similarly if you talk about JSW, there is also going to be offloading of more than 2% share. Both the stocks should be on the radar of investors because offer will be of 42 million shares if you talk about JSW Infra. Similarly, if you talk about Bharti Airtel, the total trade value could be $1 billion. So keep both the stocks on your radar while you're watching these two stocks.
Absolutely, Ankur. Now, let's also shift focus to IndusInd Bank then. Back in focus because of the wrong reasons yet again. Gaurav is standing by just to tell us those details. Now, fresh accounting discrepancies found. Gaurav, is it?
Well, yes, when we talk about IndusInd Bank, it is yet again going to be in focus, and the reason being that two more discrepancies have been reported from banks. So first, let's talk about what are these discrepancies. First, bank said that they have incorrectly recorded an interest income of around 674 crore rupees as other interest income for 9 months of FY25. Now, bank has said that they have fully reversed this in January 2025 itself. So definitely an impact is going to be in 4Q results. Second is that bank also said that they have reported unsubstantiated 595 crore rupees in other assets. Now they have said that in their disclosure that they have set it off against their corresponding balances with other liabilities in January 2025. So once again we will see this impact in 4Q FY25. But what is happening in IndusInd Bank is that yet another discrepancy, because let's not forget that earlier bank has said that there is going to be an impact of around 1900 crore rupees because of the earlier discrepancies that were found. Other than that, when we talk about the management also, we have seen the reject because of all the events which are happening. We have got Mr. Arun Khurana and Mr. Sumant Katpalia, who was MD and CEO, who resigned because of these rejects and because of these discrepancies that were found in the accounting. And apart from that, when we talk about now brokerages, now they are also being a little conscious. What they are saying is that they actually see this as a structural impairment in core profitability as business growth. In fact, when we talk about Investec, they have even downgraded the stock to sell and also cut the target price to 650 rupees. What they're saying is that the impact of 674 rupees is going to translate as around 18 bips of impact on net interest margins. And other than that, when we talk about the other impact of 1900 crore rupees, they see another structural impact and impairment of around 10 basis point in net interest margins. Going ahead, they say that it is time to remain cautious on the bank, and let's not forget that that there are many events which are happening. Bank is yet to come up with their results. So definitely watching out on IndusInd Bank. But today we are going to be a little cautious about IndusInd Bank on the back of the other discrepancy that they have reported.
The bad news is not stopping for IndusInd Bank, and this microfinance portfolio news is quite different from derivatives one, which was already doing the round. But with this, it's time for a wrap in this edition of Market Cafe. But we are leaving you with an important market voice, Gautam Shah, who will talk about technicals, who will also talk about how should you navigate in this volatility.
Momentum is intact, momentum is great, participation is great, and I do believe slowly the Nifty is headed towards levels of 25,500 and eventually even the previous high of 26,200. So yes, we look set for that. Might take a little bit of time, but that's the trajectory.
Let's analyze what's happening globally first, and then we'll come to India. What is it that you're making of the dollar index? Because that continues to move up another 1.5% overnight as well.
Well, I think dollar index, to be honest, has got into a downtrend. And I think once this level of 9,900 were to get taken out on a closing basis, you could actually see a much bigger fall of about 5 to 7%. So our view on the dollar index is actually bearish. And I think that's positive for global markets on an overall basis. The three major external factors for our market, the dollar index, the rupee, INR, and crude, all three seem to have got into a space which is actually supporting the Indian market thesis. And look at the comeback in the US markets yesterday, despite all the Trump talk and the tariffs and the fact that all of that got discounted in the last a couple of months, we now see the S&P 500 take out that very important resistance of 5,700. And I think even the US markets are actually headed towards lifetime highs. So I really don't see any concern globally. Look at Europe, look at most of Asia, and look at India, and look at obviously the US markets. I feel that the markets have digested enough negative news flow. They have the momentum globally to do well over the next many weeks.
Since all is pointing upwards for India and the world, tell me, where is it that you're seeing leadership signs when it comes to our markets? And let's first talk about large caps. And I ask because, what the market has done all through the April recovery since, very few leadership names, your Bharti, M&M, HDFC Bank, ICICI Bank. Yes, Reliance has seen an uptick of 15%, but it's lagged also for the better part of the year so far. Where is it that you think now the churn will happen, and what will actually lead the markets further from here?
Well, the churn has already happened, and I think the leadership is clearly with financial services. I think every time I've spoken about it, we've always had a bullish stance, and the way the bank Nifty has come back to test levels of 56,000, to test new lifetime highs and to sustain there, and the way some of the top banking stocks have behaved in the recent past, I think it's amazing, because it just tells you that the banks can single-handedly take this entire market higher. So I still feel that the leadership is with the bank Nifty, and my eventual medium-term working target for that index is about 60,000. So there is another 10% to play for. So if the index moves 10%, you can expect stocks to do anywhere between 12 to 20%. So that's where you need to be seriously committed into. For now, the private banks, we can move to the PSU banks once there is a pickup of momentum. But as you rightly mentioned, this comeback of Reliance is actually very good, because it's a big heavyweight. I think it formed a bottom at the recent low and can get a little more constructive from here. And not to forget the IT index. I think lovely rebound in the last couple of weeks. Looks like the bottom is finally in place. So if these three pockets of the market do well, there is no way the Nifty is going to see any major dip.
Where are PSU banks headed? Because they've not participated in this uptick at all.
Yeah, that's right. I think, in this market, you don't touch anything that has bad ratio charts, which means they don't have relative strength. And I think most of the smaller PSU banks haven't really done anything special. However, SBI remains a favorite, and I think it's a stock that we've been liking for a while now. No recommendation, just an observation. And I feel that if you have to play the PSU banking basket, you just stick to the top two names. The other names will follow suit. Give it time. Don't wait for them to, and don't overcommit it in this market, because I think opportunity cost is huge. And there are many sectors as we speak today are breaking out. I mean, I love the setup for the metals index. I think the metals index is heading towards lifetime highs. I think the worst is over for real estate. So that's an index that can appreciate 12 to 15% from here. I think the autos have had a very big bear market in the last 6 months. They have come back, and the India-UK treaty has only helped. So given all of these factors, I think there are just too many opportunities as we speak.
Do you want to guess my next question? It's aha for everybody in India with that word. Gold, gold, gold.
Yeah, I think
everybody wants it to come down. You know, it's Gautam is one of those categories where everybody wants it to come down. When gold will come down, everybody will be unhappy.
Yeah, I'm sure, the gold has actually done the unthinkable. I remember 18 months back at various conferences, it was trading at levels of 1800, and nobody had the visibility that it can actually cross 3000. But I think in charts gave you some sense that a mega trend was coming. I think for now, the trend is done with. 3450, 3500, I think is a short-term top. It needs multiple weeks of consolidation before it can do bigger things. Longer term, intact. Stay invested, but don't be a buyer at these prices. I think you will get a little.
If you like this video, then like, share and subscribe to ET Now.